And if the business genuinely requires it, employees can carry 5 days of their statutory entitlement into the following year, but it has to be used within the first 6 months. So there are a couple of strategies to implement on that one.
Okay, super, thank you.
One question. Neil here, can I just bail in there?
Yeah, sure. Sorry, Neil. Sorry.
That is one that is rising across the board, and most particularly for those businesses, if there is some change in the social distancing rules. If, for instance, hospitality, if hotels, restaurants, if there's a change in their status, this is an area where we could have a return to work being required at the same time as a whole lot of people are seeking to take leave. Cait has made the point very nicely, but I think some businesses are going to actually have to take the initiative here and quietly plan a strategy on their leave and be ready to communicate that to people. And that mightn't be a pleasant conversation in all cases, but what you can't have is if you've had a business that's been shuttered for 2, 3, 4 months, and then everyone wants to go on leave at the same time as business is partially returning to normal. So you're perfectly entitled to say, this is the way it's happening, folks, and this is what we're going to do. You do not need, this is not a time to be shy about being quite directive in a situation where where businesses face an existential threat. So get in the front foot and make a plan now.
Very good. Thank you. Thank you, Neil. One question around people on fixed term contracts that expired during the layoff. Some people we may like to renew when we are operational. A few we don't want to renew. Where do we stand on this?
Okay, so it's important to note that the Protection of Temporary Workers Act still stands in the pandemic situation. So if you don't want to renew a fixed term contract, you need to ensure that you have objective reasoning for doing so. At that point then, if you're not renewing, you just give the notice at least 1 week in advance of the expiration of the contract. If you are renewing contracts, again, due to the Protection of Temporary Workers Act, you need to ensure that there is objective reasoning for renewing a fixed term rather than making the role permanent. But its normal procedures apply throughout the pandemic on contracts.
Okay, super, thanks, Coach. Question 10, what is the situation to holiday pay / entitlement during lockdown? Does it qualify for leave during this enforced period of lockdown, even when their wage is being tipped up or not?
Okay, so if a business is closed during the lockdown, it doesn't qualify as leave. If the employee is claiming the pandemic payment, they're not accruing leave. However, if the wage subsidy scheme is in place, they are accruing leave. And if their working annual leave can continue as normal, it can be granted while the subsidy scheme is in place.
Okay, super. When we become operational again, we might not need all employees for their full contracted hours. How do we approach this?
There are a couple of options on this, and the first thing to look at is whether the shortening of hours will be legally considered short time. There's information on that available on our website, and I will include it in the document. If short time is applicable, you have to have a clause in your contract to allow for it to implement it. And if short time is not applicable, then you will have to obtain written agreement from each employee on reducing their hours, be it temporarily or permanently.
Okay, super. When the restrictions are lifted, or when the 12 weeks of wage subsidy and emergency unemployment payments stop, what is the situation for any employees that you cannot bring back from temporary layoff? I'm concerned it may take us some time to get back to full production, and we may not need the same number of people. And I don't want to be in a situation where we string someone along. Would that person be entitled to redundancy?
If you no longer have a role within your company for a person, then it will become a redundancy situation. It is important, if you are moving to redundancy, that there's a clear selection criteria in place to determine which employees are taken back and which aren't, in order to avoid unfair dismissals claims. And again, in terms of redundancy, I will refer you to our website. There is a selection of templates, guides, etc. on there around redundancy situations.
Okay, thanks, Coach. Carers leave. Will this be extended for the duration of the layoff or per the original agreed dates?
As it stands, carers leave hasn't been affected by the pandemic and it continues as agreed. And carers benefit will be paid to anyone on it as opposed to the COVID pandemic payment. And if an employee wishes to extend the period, then they will have to follow the internal procedure for requesting that.
Okay, this one is related to that. So we laid off people on the 28th, 29th of March. Staff applied for the emergency payment that week. However, welfare have said in order to get the payment for that week, they would have had to apply before the 26th of March, brackets, which was impossible as we didn't know about the shutdown then. Have welfare done anything, or are they going to pay back this week? Back pay this week. Sorry, Coach.
So this is a query I've had in a lot, and unfortunately we have no clarification from the department on the issue. However, if employees are querying it, it's important to note that the Department of Employee Affairs and Social Protection will only deal with individuals on their own claim, so they should be directed back to their claims management within that department, because unfortunately they won't deal with an employer on it.
Super. I actually just want to say I've seen a good number of questions coming into the chat room on the side of the screen there. We will be addressing those at the end there, so just bear with us. There are just a couple more questions to ask off what we received from people just prior to the Q&A. So we'll truck on with those, and then I'll get to the chat room ones shortly. So the next question is employees' holidays already booked, but they may wish to cancel. Asking employees to take holidays so that everyone does not end up taking a year's holiday in the second half of the year, i.e. they take 1 day in April, 1 to 2 days in May, and if required in June. If employees are asked to take the normal 4 days at Christmas, can this be increased to 7 days? What paperwork or correspondence is required, and what happens if an employee objects?
Okay, so again, annual leave is granted at the discretion of the employer, so it's important just to keep that in mind. And as long as you have given the appropriate 30 days notice, you can require an employee to take annual leave at a given time. They can object if it doesn't suit their personal circumstances. However, if it's a reasonable request given with reasonable notice, and if you give it in writing, then you are entitled to require that they take 7 days annual leave over Christmas if that suits the business.
Okay. Is there any template or suggested wording of a letter employers should provide to their employees if they are availing of the temporary wage subsidy scheme? In particular, and looking for suggestions on required content regarding the tax due on the payment at the end of the tax year.
Yeah, and that's a good question, because it is important to inform employees that their tax situation may change, and I will have a template letter on the website and we'll link to that in the document that we circulate after this FAQ session.
Oh, that's fantastic. That'll be very useful, I'm sure.
Can I hop in there again?
Yeah, sure, Neil.
It is just, we are focused on employees a lot here, but for those self-employed who have availed of the scheme as well. Now, Koch did answer this question before, that it will be viewed as income. Next year, you will have to declare that, but that's also the case for self-employed. Now, in the case of businesses where trading is very significantly affected and business income is affected, we are strongly advising the self-employed to take the wage subsidy scheme, not the wage subsidy scheme, because they can't, the unemployment payment, but be aware that that will be declarable, and if your other income comes in on schedule, that will be regarded as taxable income for you. Okay.
Great, thanks, Neil. Last couple of questions. A retail shop who have let all staff go, when we return, can we change to the wage subsidy scheme at 85%? We currently don't have cash flow issues, but our business has ceased for the past 3 weeks and 2 more to go.
So this is I suppose a question where it delves into what the requirements for the subsidy scheme are. So it's important to note that the Revenue have stated that paying into the subsidy scheme is not a declaration of insolvency. However, we would advise anyone who has any doubts about their eligibility to get professional accountancy advice on this, because it is quite a complicated issue, and the revenue have confirmed that there will be penalties if they deem somebody to be misusing the scheme.
Super. Okay, this is the last question we've got. It's quite a long one. Ask me to slow down, Cait, if I'm going too quick. The scheme allows us to claim a subsidy of 70% of the employee's average wages in Jan-Feb 2020, and to top up a maximum of 30% on top of that. Our staff are paid hourly, and at the moment, it is the busiest time of year for those retained. They are putting in long hours, In January and Feb, hours are considerably less. We are trying to ensure staff are compensated for the hours they are putting in now, but the average for Jan-Feb is considerably less. We are told if we top up more than 30% of the Jan-Feb average, the subsidy will be reduced accordingly. So the staff on the subsidy scheme have a considerable shortfall from what they would normally be earning at this time of year. What should we do? Happy to repeat that, Cait, if you didn't get it all.
Okay, so the basis of that question is that the wage subsidy scheme is calculated on the basis of average pay on January and February, and the scheme has been specifically designed to ensure that no employee benefits from being on the scheme, so the payment cannot be more than the average figure for those 2 months. So in that case, I would be advising you to log a query with the Revenue online system and how to handle overtime hours during the month.
Okay, thanks, Cait. Actually, I've just scrolled down a little bit. Yeah, sorry, Neil.
I can chuck in as well there.
Yeah.
Can you hear me? I see mute on my screen. That query has gone both ways. So we have people who earn a lot more in January, February than they would normally earn during the year, and so you're allowed to pay them more. And then you have people whose earnings undershoot in January and February. And these are unfortunate consequences of what are we on now, Cait, version 6 of the revenue thing. Yeah. So I mean, I've had to communicate with our own staff who are on that scheme. Some of them are actually going to make more on the wage subsidy scheme than their normally net earnings because of the way that this thing works out. But I've had to warn people that that's because of the tax effect, and you are subject to reconciliation by the revenue at the end of the year. I would suggest that this is an area where you talk to your staff, and if you have ended up low paying them within this period, I would communicate directly with them and say, look, do you want us to bank this and we'll pay it to you at the end of the year? Because otherwise you could end up paying too much tax and all that sort of thing. So just come back to us offline with this. Some of these are quite difficult, but the main thing here is you must talk to your payroll professionals on this. We don't have a payroll professional capacity within ISME. This is very, very technical. Talk to the people who are running your payroll, and then once you get professional advice from them, talk to your staff about how you do this. If your January, February earnings are either too high or too low or unrepresentative of the rest of the year, if that makes sense.
Super, thanks, Neil. I just, sorry to sound like I'm unprepared, I've actually just scrolled a little further down the questions documentation there. Neil, I think there was some points thereafter about shop rates, insurance, supports for business. Will you be covering those on this here?
Yes, will on rates, and unfortunately we were expecting a kind of a general government guidance on this. We haven't. Apply to your local authority for rates holiday. Say we can't pay, and I'm not telling you how that discussion is going to go afterwards, but ask for a rates holiday. On insurance now, insurance is an exceptionally difficult issue. Those of you, and I don't know, excuse me, those of you who are on this call now who are in the hospitality industry may have seen business continuity or business interruption insurance written into your policy, and then you may have seen an exclusion based around pandemic or notifiable disease. So the reason we're not able to give you general advice is, unfortunately, every insurance contract stands on its own. So what I'm going to give is the general advice to you. If you feel that your insurance policy covers business interruption or business continuity, and your business has been interrupted, or you've had a problem with continuity, then put in a claim to your broker, because you will have no way retrospectively of doing this if you don't put in a claim now. I appreciate that some people are going to say, but that could affect my future premium. If your business is affected to the extent that you need to make a claim, then you need to make a claim irrespective of the effect on your future premium. Having done that, if your underwriter or insurer comes back and says, no, we're not covering you, we don't think this claim is allowable, ISME has an agreement with the Alliance for Insurance Reform, and so we have a kind of a two-step process here. Come back to us even if you're not a member, okay? You do not have to be an ISME member to do this, but come back to us. With Peter Boland and the Insurance Alliance, we have someone who will take a technical look at that refusal to cover you. And so the first stage of this is someone will say, well, look, the insurer has a good case here, or the insurer doesn't have a good case here. And if we consider, or if our people consider that you do have a genuine case to pursue your insurer for business continuity or business interruption, we also have a barrister who is looking at these. Now, we're not allowed to take class actions in Ireland, but it may be possible to look at cases on a case-by-case basis, where we would then lever, shall we say, insurance companies into settling some of these or providing cover where they had at the first instance refused. So I appreciate that that is a very long answer to a very short question, but the insurance contracts are individual contracts between business and underwriters, so we can't give an across-the-board answer. But if you feel you've been badly treated, come back to us and we will get a professional to have a look at that claim for you. Okay?
Super, thanks, Neil. Neil, did you want to touch on sort of further business supports and paying suppliers, that type of thing, sort of following on from the insurance?
Yeah, I mean, unfortunately, this is the big area where we've not had movement. I mean, the government moved really quickly to shore up incomes for most people, either through the unemployment payment or through the wage subsidy. The big gap at the moment is the fact that there is no liquidity support for businesses, or the liquidity that's been offered is on a debt basis. So every time we get on to the Department of Business and Enterprise about this, we're told, well, there's SBCI funding for this, there's the Credit Guarantee Scheme for that, and there's Microfinance Ireland for the other. The problem is that you as a business will still have to go through normal loan qualification and application criteria. And the rates appended to those liquidity solutions at the moment are commercial rates. SBCI is in the region of 4%. The Credit Guarantee Scheme is whatever you can get from your bank plus 0.5%. And Microfinance Ireland, which was originally being offered 50 grand at between 6.8 and 7.8% and is now down to 4.5%. Whoopee. While the state is borrowing money at the moment on the money markets at 1/4%. So the liquidity solutions that are available at the moment are utterly inadequate for what our businesses are going through at the minute. We are working extremely hard in the background among a number of consortia who are interested in this at the moment. This is an argument that is happening effectively behind closed doors at the minute, but you will see that argument today in the Independent. If in the Irish Independent, you will see that the former director of the central bank, Honohan, is having a row with the SecGen of the Department of Finance. Where we're coming from is businesses need grants. You need free money, but this isn't a charity. You're not been given this as a charity. We're looking for grant assistance for businesses because our studies show that on average, the average SME owes €78,000 to other creditors. If you don't pay that to them, you're going to burn them. So what we're looking for is direct liquidity support for businesses so that you're able to pay your creditors in the same way as the state is helping you to pay your employees at the minute. We haven't won that battle, but there's enough of a brains trust behind this at the moment that we're at the point of saying to government, if you do not bail out our SME sector, you're going to have a plan B for taxes in 2021 because the SMEs employ 74% of Irish workers. They SME employees provide 55% of the tax revenue, 55% of the USC, 62% of the earnings that all Irish people make in the workplace, and 68% of the VAT. So our message, loud and clear, is going to be to government, you either bail out this sector or you're going to need a magic pot of gold with billions and billions of euro in it, because if you burn the SME sector, then you're going to burn the revenue and the exchequer. And the last point I want to make on this is an area where we're asking for your help. So all of those people that are on this call, I need you to get a call into your local 3 or 4 or 5 TDs today, and say, what are you doing about liquidity? Because if we stop trading, your local towns and villages are going to be decimated. So what are you going to do about it? We want to hear you. I want to hear you getting stuck into Pascal Donoghue, stuck into Leo Varadkar, and saying, where is the money? You have got to keep our sector afloat, okay? Not perfect answer, Adam, to your question, but you know, we have to fight for our own sector now. We have to fight very hard for it.
Thanks, Neil. There's just, before we move into the chat room questions, actually there's a general question here, which I think will resonate with most here. How does an SME owner policy of extracting profits from the company for other wealth, e.g. pension, lifestyle use, reconcile now with supports being decided upon by banks that largely base decisions on retained earnings and cash balances?
I'll come in there again, Adam. That's a very hard question to answer. I don't want to sound like Father Ted here, but this is one of the areas that right at the beginning, for instance, of the wage subsidy scheme, we said, you know, this is the reckless trading debate. The simple answer to this is that we don't know. This is why we have been telling businesses to take professional advice before they avail of the wage subsidy scheme, but we have recommended that people avail of the wage subsidy scheme. Your banks and your creditors and lenders should not be drawing an inference from the fact that you have availed of the wage subsidy scheme. Indeed, the fact that you have availed of it is showing that you're trying to source working capital to pay your wages from whatever source you can get the cash. So I'm not saying that some stupid person in a bank won't take an inference they shouldn't take, but the banks, the official feedback I'm getting from the banks is you should be availing of this scheme because this helps to keep your business afloat. Now, there was kind of an addendum to your question, Adam, which is, what view will the revenue take? Now, this is a separate question, and it's a more difficult question, and there is no clarity on it. So just to explain that for those of you who are wondering about this, I'm just thinking of the case of an SME that avails of, between now and September or October, avails of 50 grand of support through the wage subsidy scheme. And when it completes its annual report for the year, it shows a 50 grand profit. And then at the end of the year, it distributes a dividend to its shareholders who might not have any other form of income. The owner of the business, there are lots of you whose only form of income is the dividend, the declared dividend on your company at the end of the year. And what view will the revenue take of that dividend where you have availed of the wage subsidy scheme? And unfortunately, I can't answer that question because that has not been clarified in the legislation, and it's not been clarified in the Tax Consolidation Act, and it's not been addressed at all in the Companies Act. I can tell you that, again, there's a huge amount of work going on in the background on the Company Law Review Group on which I sit, among the Institute of Directors and the Law Society, asking for clarity on what's going to happen business owners who avail of this scheme before the end of the year. Unfortunately, and I'd love to be able to give you a steer on it this morning, but I can't.
Okay, thank you, Neil. I'm going to move over to the chat room questions now, and I'm literally just going to run through them in chronological order as they came in. So the first question is from Brendan. We understand revenue, sorry, just lost my place. We understand revenue may be paying the subsidy at €410 per week, irrespective of the individual's pay, i.e. possibly overpaying. Have ISME seen any examples of this?
Yes, is the short and simple answer to that. Just before we move on, I'm just going to say that on my screen here is the Revenue Frequently Asked Questions version 7, which was issued this morning. And they have actually clarified on that one of the questions that was asked earlier around ceasing employees on payroll. So just to clarify that Revenue have now changed the scheme so you do not have to cease employees claiming the pandemic payment on payroll as of this morning, version 7 of the FAQs. We'll include a link to those in the document that we send out. In terms of the question, yeah, it is definitely coming up that employees are receiving the 410, and again within the FAQs it is documented that you need to be aware that any overpayment will be reclaimed. They haven't clarified how that's going to happen yet, but we're keeping an eye on the FAQs.
Thank you, Coach. Okay, next question.
Adam, again, if I bail in there.
Yeah, sure. Sorry, Neil.
One thing, because they publicised the 410 a week, what a lot of people missed was that 410 is subject to the 70% cap. So if someone was making 410 before, they're not entitled net. They're not entitled to 410 under the wage subsidy scheme. They're entitled to 70% of 410. That bit has been missed by a lot of people. So it's really important to point that out. That's where the risk rises. And this is why you need to be taking advice from your payroll professional the whole time. But it is important to know that, and this is again where you have to warn your employees, this is subject to reconciliation by the Revenue at the end of the year. That does not mean that the Revenue are going to go into someone's bank account and take the money out. But what it does mean is PAYE workers get a €1,650 per annum tax credit, which equates to €137.50 per month. And it is from there that the Revenue will take the money. In other words, when you apply for your C2 certificate from the Revenue, or your payroll provider does, your tax credit will be reduced by the amount that they need to take back. And unfortunately, that could continue for more than 1 year. So again, that's a really technical payroll question. But to Brendan, I would say be really, really careful. Do not overpay. It's better to underpay and make them good afterwards than overpay and leave them with a tax problem later.
Very good, thanks, Neil. Next question's from Porrick. Some of our team are not working, still on payroll, but on the wage subsidy scheme. Others would have got nothing and are therefore not on wage subsidy and have had to be laid off the books and onto the COVID unemployment benefit of €350. We also have staff on wage subsidy scheme and being paid top up and still in the workplace. Is this the correct action, or should those on books and on wage subsidy still be working? In other words, should those not working have been laid off completely to COVID unemployment benefit of the €350?
The wage subsidy scheme is applicable to any employees that you are trying to retain and keep on the books. So if they're working, if they're not working, or if they're working short time hours, they can still claim, you can still claim for the wage subsidy scheme on their behalf.
Super, thanks, Coach. And the next question is, does an employee still get full holiday entitlement for the year? If 20 days a year, that's 1.67 days a month holiday.
So this will depend again on whether they've been retained on the wage subsidy scheme or whether they are on the COVID pandemic payment. If they're on temporary layoff, their contract is effectively paused and they don't accrue holidays for the time. If they're on the wage subsidy scheme, they're not classed as on layoff and they do accrue the holidays, regardless of whether they're working or not.
Thank you. Next question. We are still trading and have introduced shift work to give the essential service to our customers. Are we entitled to do this, as we are getting some requests saying they should be getting increased rate for shift work? I have said they are lucky to have jobs, but I just need to know, am I entitled to do this legally, as these are exceptional circumstances?
That is an incredibly complicated question, and it will depend on what sector you're in, whether there's a joint committee agreement in place, whether the shifts include night work, that kind of thing. So unfortunately, there isn't a general answer to that one, and we would need much more detail on that one in order to answer it.
Okay, thanks, Coach. Actually, this came in from Kira, our colleague Kira in marketing. It's actually an email that she's just received. Can staff who are currently working from home choose to continue? Our staff contract states our premises is their place of employment. Just worried about precedent having been set, as they are successfully working from home now, but we wouldn't choose this as employers once things return to normal. Another question from email. Oh, sorry, perhaps you can answer that first one. Do you want me to read that again, Coach?
No, I have it here in front of me.
You have it? Okay, super.
Yeah. So in terms of setting a precedent, again, benefits like working from home are granted at the discretion of the employer. What I would advise is that you put a working from home policy in place, and within that have it stated that it is granted at the discretion of the employer and that it can be rescinded at any time, just to cover yourself off, but it is granted at the discretion of the employer. So again, employees don't get to choose it.
Okay, thank you, Coach. So another question from email. If we are allowed fully back on the 5th of May and we have paid monthly for April up to the 30th and are on the subsidy scheme until that date, what happens if we open on May the 1st and employees do not report for work? Is that a day's holidays or unpaid leave?
So the important thing to note with this one is that within the guidelines of the operation of the wage subsidy scheme, part of it is that you would intend to retain the employee on your payroll. So that is just important to note in terms of unpaid leave. However, if you are back in work and fully operational and employees don't turn up for work, again, that is falling back to your normal internal absence and disciplinary procedures, and you deal with it through those.
Okay, thank you. Actually, just a quick inquiry here. Can we email the people on the call the details of the updated version of the wage scheme after the meeting, please? So I'm sure we can do something there for you. Next question from Siobhan. You said that you have to give 30 days notice on employee being requested to take holidays, but we are reviewing this on a week-by-week basis. If sites don't open in May, then we may need them to take days in May, therefore not in a position to issue the 30-day notice.
Okay, so with that one, I suppose the 30-day notice is if you're directing them to take holidays. If they agree to take the holidays with shorter notice, then that's fine and that can be done. But I would advise, if they're doing that, that you get it in writing. So ask them just to email in an annual leave request, or to email that they're agreeing to take the holidays. But if they agree to it, it's absolutely fine with less than the 30 days.
Okay, super. And I just want to say thank you to John Moore, who forwarded a link to today's Independent in the business pages there. SMEs need rapid help to avoid permanent job losses. So thank you for that, John. I'm sure we'll all have a look at that. Caroline has also just sent an email, a link into revenue.ie about employing people, documents, guidance on operation of temporary COVID wage subsidy. So thank you very much, Caroline, for that. Next question is from Colin. If a company does not currently need the wage subsidy scheme, but finds that it needs it later, will it be able to apply?
So again, this one is quite a technical question and it will depend on a number of variable factors, but it is important to note that the FAQs that Caroline has kindly provided a link to there have the definition of the eligibility criteria within it, and there is a time frame around the downturn in revenue, etc., outlined in that. So as long as the scheme is open, applications can go through. It's not that you had to apply by a certain date, but I would advise that if you're in any doubt about the eligibility, that you get advice on it.
Okay, thank you. Now there's a question here in relation to the shift work question. No industry agreements and no night work. So will this help clarify my question?
Yes, it does, to a certain extent. The only other thing I would say is that if they are working Sundays, they will be entitled to a Sunday premium. But other than that, if there's no night work and there's no industry agreements in place, there isn't necessarily an entitlement to a shift allowance. However, it is often done to incentivize employees who are working antisocial hours.
Okay, thanks, Coach. Question from Anjali. A number of self-employed are being denied the unemployment payment, brackets, no reason is given in the denial email, close brackets. So they are being forced onto the wage subsidy scheme. Is ISME aware of self-employed folks who have appealed the decision for denial of unemployment successfully?
Neil here, that certainly hasn't come to me, but I have seen that reported in the media. But some of the refusals that I have seen, Adam, have been technical in nature. So incorrect bank accounts given, people for whom a revenue return had not been made. So it's actually very difficult to give a consistent answer to that one. What I would say is, look, if you're a self-employed person who has been paying your PRSI and you have been denied this, in other words, when you go into the unemployment benefit page and you feel you meet all the criteria and then you have been refused, get in touch with us.
Thanks, Neil. Is a question from Peter here. Do you have to increase salaries above the subsidy if you have a strong bank balance, but need this for cash flow?
I'll come in there again. It is not a requirement to backfill, but the most, especially when you get into there is an expectation from the revenue that you are trying to keep your employees whole. So if their previous net earnings were €600, they qualify in the middle bracket. So the business will get €350 and there is an expectation that the business will pay them €250. But if the business can only afford to pay them €50 or €100, well, then that's what you pay them. But there is an expectation built into that scheme. The wording of it is extremely fluffy, and there are two sets of, unfortunately, the law is written into the Emergency COVID Act, but the revenue guidance is in revenue guidance, but the guidance, of course, does not have the effect of law. But what I can say to you is that there is an expectation that to the best of your company's ability and cash flow, you will keep the employee whole, but you do not do that at the risk of undermining the financial viability of your company. Okay.
Okay, thanks, Neil. Question from Anya here. Can you request of your staff that they be paid in lieu of holidays taken?
It depends on whether you are giving holidays above the statutory minimum. If you are giving holidays above the statutory minimum, then you can pay in lieu for those days, but every employee has to receive their statutory minimum, which for a full-time employee is the 20 days. They have to receive that in holidays unless they're leaving employment during the year. At that stage, they can be paid, but other than that, they can't be paid in lieu of holidays.
Super, thanks, Coach. And lastly, this is the last question. If you have any more questions, keep banging them into the chat there. Thank you, Peter. Another one received. Aidan, Neil, can you please clarify Patrick Houlihan? Is he pushing for some form of liquidity grant?
Yes, he is. So that was the point I was alluding to earlier. There is a battle royal going on behind closed doors about whether businesses should have access to debt finance on the one hand, or straight grant finance on the other hand. So if you look at, and a huge amount of this, unfortunately, ladies and gentlemen, is being governed by the big fight that's going on within the Eurozone. And the northern nations, the frugal four, which is Germany, Netherlands, Denmark, and Finland, are objecting to direct liquidity support on the basis that, you know, we shouldn't be spending our money on this sort of stuff. The issue for us, of course, is that this is not about paying businesses money to do stupid things. This is about liquidity support, without which those businesses are going to burn their creditors. So to answer Aidan's question directly, what Patrick Houlihan is saying is that businesses like yours do not want debt. It is absurd for people like you who have gone to the bank and said, I can't afford to pay my mortgage, and I can't afford to pay my rates, I can't afford to pay my electricity bill, and I'm only paying my employees because the state has given me the money to pay those employees, but I want to go to the bank and take out a loan. So that is a fundamentally idiotic position for people to adopt. It is unfortunately because we have a civil service and a Department of Finance that is fixated on the notion that SMEs are just trying to permanently rip off the state. What you have there with Professor Houlihan is the educated fiscal view, which is we are going through a simultaneous demand and supply shock that is stopping SMEs trading, and it is unwise to ask those businesses at a time like this. These are not bad businesses, these are viable businesses that can continue to trade if they can maintain some cash in their accounts. And what Professor Houlihan is saying is, look, if we put cash in their accounts with strings attached, i.e. those strings say, you will pay your creditors, you actually will pay the bank for your mortgage, you'll pay for your utilities, you'll pay the ESB and the gas, then they're not actually benefiting the whole, the whole of society benefits. I did put up previously on Twitter, I'll get Ciara to do it, I know she's listening, this was far more beautifully explained by the actor Peter Coonan in the film The Guarantee, about the last time we hit the wall 10 years ago, about what liquidity means, and it's how $100 goes around a small village. Nobody's better, nobody's poorer, but everyone has discharged their debts. And in the end, you can actually burn that $100 without any effect on the overall economy. That's what liquidity means. We'll share it with you. It's a kind of a funny piece of YouTube, but it also explains what liquidity means, because at the end of the day, this is the sort of money that shouldn't be going onto your balance sheets. Liquidity is money that will come into your bank account and more or less leave it at the same time to discharge debts you already owe to other people. Okay, that's about as much as I can say on that one.
Thanks, Neil. If we have to let staff go, just lost that, sorry, another question came in. If we have to let staff go, does the normal redundancy apply?
The short answer to that is yes. If you are in a position where you no longer have as many roles, a requirement for roles in your company previously, then it does become a redundancy situation.
Okay, thanks, Coach. Another question from Colm here. If a company which has availed of the wage subsidy scheme due to a downturn in business, but due to an upturn later in the year, ends the year with only a small decrease in turnover, will it be penalised and will it be required to repay? That's a good question.
I sort of alluded to this at the beginning, Colm, but first of all, that is not specified in law. So in other words, the revenue has not said what their treatment of the wage subsidy scheme to your business is. In other words, it does look like this is a liquidity support that is provided to your business, but it's actually not provided to your business. If you read the T's and C's, one of our people has now put up version 7. The most important T and C of the wage subsidy scheme is it is not for the benefit of the business at all. If you take that money and you pay anything less than 100% of that benefit to your employees, then that business is liable for that money. But if you avail of the wage subsidy scheme and you pay 100% of the benefit to your employees, there is no liability later on, irrespective of whether your business recovers or not. That's how we understand it at the moment, Colm. So I'm not betting my house on my answer to that question, but we have been told, and the way the revenue guidance suggests, is that this is a benefit not for a business, it's for the employees, and you as business owners are the vector for this. You are passing on that subsidy to your employees, but this is a government support to your employees, not to your business, and therefore you won't be penalised later on for using it.
Thanks, Neil. So another question, a good one actually. Can employees use built-up overtime with their COVID payment if employer cannot top up?
Okay, so I just want to make sure I'm understanding this one correctly, but is it that if they're working overtime, they're building it up and it's not being paid until they finish? Because if that's the case, it depends on what's in your contract, and so if there is a contractual term in your contract that overtime hours have to be paid within a month of working them, etc., then you can't delay that payment. If there is an arrangement within your contract that overtime hours can be banked to use as pay in lieu, etc., then they can be banked. So it depends on your contract of employment, if I'm understanding that one correctly.
Okay, thanks, Coach. And perhaps the person who asked that, the person who asked that's actually dialing in via telephone. So I've actually only got the meeting code there, 353853. So if you mean something else, please just drop it into the chat room there. Thank you. And another question from Porik here. Many businesses, particularly in the hospitality sector, are kicking to touch on payments to us as a supplier, claiming not to open equals no cash. It is quite a blank and unhelpful position. What does ISME advise in these situations where money is overdue, but sectors and clients are refusing to pay?
Porik is putting his fingers on the liquidity question. This is why we need liquidity, not to make our businesses better off, but so that we don't burn our creditors. Those of you who have been following us, what we've been at for the last month, we have estimated that the average SME owes other SMEs, in other words, not their employees, just other SMEs, €78,000. And if they just batten down the hatches and refuse to pay, that's equivalent to €11 billion in the economy going bad. I have been on conference calls, obviously, with all sorts of trade associations now that are on Minister Humphrey's conference calls, and that is what Pádraig is saying. There is a very consistent message, unfortunately, and I know where they're coming from with the hospitality sector and pubs in particular, because an awful lot of them are family mom and pop businesses, and they've said, we've shut the doors, we've laid everyone off, we're all right. The problem there is they're leaving small food suppliers, cleaning companies, computer companies, they're leaving all their suppliers swinging in the wind. What I would advise you to do with those businesses is to say, look, first of all, you need to engage with what we're doing in terms of the liquidity party here, folks. If we start burning each other, what are we doing? We're setting up a circular firing squad and we're all going to kill each other. And that is a fundamentally stupid way to react to the COVID crisis. So I would be having an adult conversation with those customers of yours and saying things like, okay, if you can't pay me all of my 1,000 invoice, how about paying me 100 quid a week or 100 quid a month, but discharge your liabilities. You need to do that. Because if you don't, I will have to recover that money from you in the end. And I don't want to be going through the district court process with you, but I will register the debt against you. Now, we do know that some businesses they can't pay, and some businesses are going to go to the wall. There's no point in pretending that that's not going to happen. You will notice that we are also trying to get examinership light for the SME sector. That means most of you who've never gone through an examinership know that it costs about 80 grand to get court protection from the High Court. You can't afford that, or most of you can't. We're trying to get a lower process in place there. We want your help with that as well. If you have a viable business and you're continuing to trade and you're waiting for money from someone else, what I would do is get to the front of the queue, call them up on the phone after this conference call and say, John, Mary, I need you to pay something if you can't pay it all, because if my business doesn't stay trading, you're going to lose one of your suppliers. It really is important not to screw each other over during this thing and say, if we try and discharge the debts that we can, I can tell you, dealing with my own staff, last week we paid out 20 grand in suppliers that needed it because they're good suppliers. We want to keep a relationship with them and we know that they really need that money. That's the kind of conversation you need to be having with those people now. That's the best I can do, Pádraig.
Very good, thanks, Neil. Another question from Anjali. How does the wage subsidy scheme work in relation to the directors of the company that would normally be drawing a wage? As Neil was saying, the money has to be used for the employees. So presumably a director would be treated in the same way. And if the money is being used to pay their salary, that would be allowed, as per Neil's explanation earlier.
Yes, they are. So you get two types of directors of a business: those who run themselves through the standard payroll, and they can avail of the wage subsidy scheme. If they do not go through the payroll, then they have to avail of the COVID unemployment payment.
Okay, thanks, Neil. Angela asks, is it possible to pay an employee commission due while still claiming the wage subsidy for the employee?
The answer to that is yes, and we've come across that issue ourselves. I'll get Cait to come in here afterwards. If commission is irregular, though, what you have to watch is the tax implication. In other words, the wage subsidy scheme is based on the average January-February wages. So if you're going to pay a big slug of commission in one lump, you just have to watch how that is treated for tax purposes. I'm not sufficiently expert from the payroll point of view but that may subject either, that could impact the company more than the employee from a tax point of view, it may be worth having a conversation with the employee about holding off, in other words, banking the commission on Cait, unless you, I haven't read version 7 of the guidance yet. I know it's only out this morning, but maybe you have something better to chip in there.
I suppose it depends, as you said, it depends on how the commission is treated, and it is important to note that bonuses, commissions, payments, etc., if they were included in the gross pay is part of January and February, were included as part of the calculation on the average net pay. So it is just, it will depend on how it's treated. And again, I will go back to Neil's advice of getting professional advice from your payroll provider on it.
Super, thanks guys. Another question just in on email. Is there any chance of the statutory redundancy rebate of 60% being restored?
Who's brought, oh, Kira is giving that from email. This has been, for those of you who are members, you will know this has been in our pre-budget submission for the last 10 years. There is a huge injustice here, just for anyone. I'm on my 4th recession now, so I go back a bit, and got made redundant twice in the last one. So, but just so people are aware, employers' PRSI increased by 0.5% in 1979 to pay money into the statutory redundancy fund when statutory redundancy was introduced. In the last recession, our then Social Protection Minister, Joan Burton, first reduced the statutory rebate, and then she eliminated it. But surprise, surprise, the 0.5% employers' PRSI payment was not taken off employers' PRSI. So 0.5% of what you pay in employers' PRSI goes into the fund that's meant to reimburse this. This is a policy ask of ours. At the moment, the point is moot because during the emergency period, employees cannot effectively seek redundancy from you, and so we're in a sort of a standoff one. But from a policy perspective, we are looking for that, because the downside for employees, whatever about employers, is, and this has been asked earlier by other people about saying, you know, are we going to lay off people? The fact is, if employers are forced to pay statutory redundancy, but they can't get anything back on it, it really reduces their incentive to hire people, and most particularly after this, because I know that an awful lot of people who are on this call will be looking at their staff going, do you know what, I can do without taking 2 of these back. And now, of course, a redundancy will, statutory redundancy will apply to those that you don't hire back. But if the state says it's important to pay statutory redundancy and you're paying 11% in employers' PRSI, you should be getting some of that back. So that is a constant bugbear of ours. And again, this is another area where I want you to pick up the phone to your local TDs and say, if you don't think statutory redundancy is important, then reduce employers' PRSI by 0.5%, thanks very much, and get rid of statutory redundancy. That's my that's my therapy for the morning, Adam. I've got that off my chest now.
Very good. So a question from Cornelius here. Is there any likely future exposure from claims put forward from employees that haven't received 100% of their agreed salary, plus any taxation liability, either for the employee or for the employer?
In terms of payment of wages claims, that again will depend on whether your employees are working and working their full hours. If they're working their full hours and they have received a pay cut as a result of the scheme not being topped up, etc., it could be viewed by the WRC in a claim as that it's a payment of wages claim. So if your employees have taken a deduction in pay as a result of this, but their hours remain the same, it would be important to just to have a document signed that they agree to this for a temporary period.
Okay, thank you, Cait. Siobhan's got another question here. With regards to the top-up subsidy amount, if we paid the full 30%, they will be getting overpaid on their normal monthly salary based on bonus paid in January. Spoke to Revenue and they said yesterday that if we top up the 70% with enough to cover their normal net pay, this reduced the amount as a company we have to pay. But Neil mentioned that this could affect our eligibility as we have a good cash flow at the moment, but could change over the next 2 to 3 months.
I'll come back on. There's obviously some people who are joining this late now, so Adam, we'll probably have to, because otherwise we'll end up answering the same question again. If you top up in excess of what they would.
Sorry, Neil. Sorry, Neil. We lost you there for a couple of seconds. You might want to start again there. Sorry to interject there.
If a business tops up in excess, I'm going to get Cait to follow back on this, because this is one area where the wage subsidy thing gets very dense. If you top up to the employee's normal wages, no tax liability exists for the company. If you top up in excess of that, you're potentially creating 2 liabilities. Now, both for the company and for the employee. Siobhan is asking, again, this is a difficulty with the scheme in that the index period for calculation of the wages is January and February. So we're back to, and Siobhan, but Cait and I have dealt with this, but if January and February are unrepresentative of your employee's standard year, in other words, if a lot of people in hospitality, for example, earn an awful lot less in January and February than they would in December. But you get people, for example, in the motor trade who earn an awful lot more in January and February than they earn in the rest of the year. So this is the area. We're not going to be able to give you a precise answer to that question. But if your January and February earnings are out of sync with the rest of the year, you really need, first of all, talk to your payroll provider, and secondly, you need to negotiate or talk to your employees and say, look, how are we going to handle this in the wage subsidy? Because we don't want to create a huge tax liability either for you or for us. And it may be possible to sequence someone's benefit over a period of time. But if your January and February standard net earnings for your employees are out of whack with the rest of the year, be very careful how you handle it. I'll just go no further than that. And probably, Adam, we'll just need to check those ones again to see if we're asking the same question over and over again. And I should say, by the way, because Kira has asked me, to all of you who are non-members, please follow us across all social media, follow our Twitter account, our Instagram, our LinkedIn. We will be emailing you all the answers to these questions because we're tracking them as we go, but we also answer these things on the fly on social media as well.
Yes, thanks, Neil. Just the last couple of questions here, guys. Can a working director on payroll apply for the COVID pandemic unemployment payment?
Yeah, that's come up already. So yes, you can. If you go into the COVID pandemic unemployment page on welfare.ie or on gov.ie, you will see what the qualification criteria are. Just to, oh, sorry, that says a working director on payroll. Cait, I'm pretty sure the answer to that question is no. If you're on the payroll, you go onto the wage subsidy scheme. If you're not on the payroll, you go on to the unemployment payment. Cait, correct me if I'm wrong.
Yeah, no, that's exactly it.
Okay, thanks, guys. Thanks for clearing that up. Last question from Peter. If your salary was over the 960 euros, is it true you are entitled to nothing, in capitals? If so, can you drop the salary below 960 to avail of the 350 euro subsidy? Can you legally drop someone's salary, or do they need to agree to a reduction?
So this is one of the amendments to the scheme that is going to take effect from the 4th of May. If somebody's previous net salary was over the 960 previous to the COVID pandemic and it is now below it, they may become eligible for the scheme. There is various tapering, etc., applied to any subsidies, and details of that are on our website. In terms of dropping somebody's salary, it is a change to a core term in their contract, and absolutely you would need to have an agreement in place for a temporary reduction in salary, and you would need to retain a signed copy of that agreement by the employee on file should any claims come up around it.
Super, thanks, Coach. Well, look, guys, I hope you have all found that very useful. Now, we, as just alluding to what Neil mentioned a few moments ago, an awful lot of announcements and updates are coming from the government, from various departments. And when we see those updates, we are putting them out through our communication channels. So if you keep an eye on our isme.ie/C19 page, that's open to members and non-members. There is a huge amount of information, supports and assists for all of you. So it's well worth you having a look through that. But also we do use Twitter, Facebook, Instagram, LinkedIn to announce these additional supports as well. So do keep an eye on those. We do keep them updated on a very regular basis, pretty much up to speed at that moment in time. So do follow us and do follow the information. We most likely will hold another Q&A session, so keep a lookout for that as well. We do have a recording of this, and I do have to admit that I missed the first 5 minutes, but thankfully it was just me, Neil and Cait introducing ourselves. So the lion's share of the meaty info has been captured, and we'll be happy to send a link out to this recording to you all after this session. So you're all very welcome. Thank you very much for attending. We hope you found it useful, and please stay in touch with us if you have any more questions. Thanks very much, guys. Take care. See you.